Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, December 11th, 2009. Well, folks, we are seeing the market slightly to the upside today. The Dow is up about 61 points. The Nasdaq, however, is down on the day, down about 2 points, while the S&P 500 is up about 3. Now, we're seeing some weakness in a lot of key tech issues such as Apple Computer, which is down $2 and change on the day. Research in Motion, and I'll punch up these charts. There's Apple Computer. You can see that quite a sell-off today, considering the markets are overall slightly higher on the Dow and the S&P. Research in Motion, RIMM, look at that, near the lows of the day. Baidu is down about $3, and Amazon here again, we'll punch up Amazon's chart, down about $1.30 on the day. So you are seeing a little weakness in technology today. However, you are not seeing that portrayed across the board on stocks like ExxonMobil. ExxonMobil is showing some good strength out there. Even though oil is slightly lower on the day, the USO is down about 22 cents. What you can see is you're basically chopping on the USO. Now, the interesting thing about the USO here is at the lows, it hit the daily 200 moving average, which does dictate that you should have a little bit of a bounce in the USO, and you are starting to get that off those lows. Now, again, let's go back to the SPY. There's some key things I want to talk about it on a technical basis here that you need to be aware of. Number one, look at where we're hovering on this chart. We are hovering currently right on this white trend line. Why is this white trend line significant? Because it happens to coincide with the highs from yesterday. So you can see how the highs from yesterday are being tested right now. Now, we were above them earlier, but the one thing that's important to note about being above it earlier is we never confirmed the move to the upside above that level. So you never confirmed the move. Therefore, that tells you you could reverse, and that's exactly what the market did here, selling hard all the way back down, coming all the way back in, actually making new lows of the day right around 11 o'clock, 11:30 in the morning. All right, so again, you can see that hard sell coming in. Why? Because you never confirmed a breakout above this line. This white trend line was never confirmed as a breakout. And again, these are methodology points that you want to learn, and by doing so, you obviously need to join the Research Center and the Intraday Stock Chat. Now, a couple things to watch as well. On the downside here, you can see that initially we opened right above this white line. You sold back below it. You came back in touching this beige line and the 20 moving average. That gave rise to a big pop. We had some numbers out, wholesale inventories and Michigan sentiment numbers coming out. They were both decent numbers, including retail sales. Retail sales today came out positive. Also, China had some good news out there on production out there, kind of showing some good strength in China. Now, a few other things to look at as well. We went up here, you hit the high of the day, you pulled back, you double topped, and then that's when the selling came in. And again, the key here was that above this white trend line, you never confirmed a breakout above that white trend line. And again, you have to kind of join the Research Center to understand that and be taught it. Now, we have a webinar tomorrow as well, folks. A lot of this will be covered in the webinar, key counts, even stuff way more in depth than we cover in these videos, even to the premium subscribers, way more in depth as well. So be aware of that. Now, again, as you sold off, the key about the sell-off was you came all the way down underneath this beige trend line, and then again, you never confirmed to the downside. All right, you never confirmed to the downside here, and that tells you that there's a high probability of a reversal, and sure enough, the reversal comes in. You float back up, go right to this white trend line. Now, the key about this white trend line now, as you moved up, there's actually a distinct bullish pattern development right here. You have a big green up candle off of a bigger up move. Inside that green up candle, you have inside bars of consolidation. That is considered an in spirit of bull flag pattern and has to be looked at as a possible bullish signal to the upside. So again, keep an eye on that, folks, and look for a possible move up. If you were to break up off of this pattern, you could easily go back and test the highs of the day by the end of the day. Now, should you fail and come back in, and how would you fail? You could close below this green candle. If you take out that green candle to the downside and go into this 50 moving average and close down there, that would dictate that that bullish pattern has failed, in which case you would look for this beige line to break and look for a move to the lows of the day right here. All right, if you get to the lows of the day there, you obviously look for a double bottom bounce. Now, the key level about why this low of the day was the low of the day, does anyone know? Just looking at this chart, do you know why the low of the day was a key buying area? Do you know why we called it out in the chat room as a key buying area? All right, give you a second to look at the chart, and I'll answer that question right now. The key was gap fill. Here's your gap fill, folks. There's where the market closed yesterday. You pierced it. That's your buying opportunity. That tells you when you go to gap fill, there's a lot of support there. You're going to get a bounce in the markets, and sure enough, the markets move back higher off of that. And look at that. If you bought right there, look at the move up on the intraday. And by the way, all this analysis that we do on the intraday for you in the free videos is comparable to all the analysis we do on all time frames. All right, we go in the nightly videos on all time frames. We look at the long term, the short term, the midterm. you name it, the daily, the weekly, the monthly charts for long-term investors, for swing traders. If you're in that group, you got to be joining up, folks. It's a no-brainer. Again, I can't tell you how many kind of people we've had join up that says, wow, I wish I did this 3 years ago. You know, I mean, it's that simple, folks, because the amount of knowledge they gain, the amount of profits they put in their pocket offset in huge ways the time that they lapsed. I mean, it's just a sad thing to not join up. So anyways, keep it in mind. Also, just please note that you may be starting to break out on this bullish pattern. Watch this bullish pattern, folks, on an intraday. And I'm giving you exactly live play-by-play here as this market is trading. I'm not seeing this in the past at all. This is exactly what we're seeing right now. So again, be aware right at this time frame of 1:37 p.m. Eastern Time, this bear flag, bull flag continues to form. Now, a couple other things to note here. One thing you can also watch for is you can also connect these lows, and I'll do that as well. And if you were to sell off, you could have a little bit of support coming in there, and that would be on a little bit of a sell-off below this beige line. A little bit of support coming right in here if we did come in and hit that line. If you will get through this gap fill right down here, you're going to look for the 200 moving average and the lows from yesterday to be hit. That would be a very, very good level of support. Now, again, overall, the volume is extremely light. Extremely light on this chart. Therefore, you have to favor the upside, folks. Light volume, you favor the upside. It seems like we've gone into that holiday type volume already. Tonight being the first night of Hanukkah, first night and day tomorrow, and then you go into the next few weeks where you have Christmas, New Year's. The volume will continue to get lighter and lighter. Right now, we've only done 80 million on the SPY, on pace for about 120 million today, I would say, overall in this market. So again, be aware of that. Now, again, just to mention, webinar tomorrow. Webinar tomorrow. You want to get in on that, folks. The amount of kind of insider information we're going to release on our technologies in our methodology to help you learn to trade the markets and profit from these markets is amazing. And again, everyone that's taken that webinar, unbelievable stuff, and they've put it to use literally the next Monday. They have it on Saturday. They're making money off of this stuff by Monday morning when the market opens. All right. You know, always, as we always say, you can always join the Research Center. Test us out in the Research Center for $49.99 a month. I posted a chart last night. SUTR. By the way, gave this to everyone in the chat room yesterday and yesterday evening, posted it to the Research Center, guys. Look at the move up today. No-brainer there, guys. No-brainer. Tariffs on China steel. Also a bunch of other things. So this Chinese steel company was a no-brainer, and sure enough, popping as much as 10+% today on the alert to our premium subscribers. Just there alone, you buy 1,000 shares of that. Just 1,000 shares, $2 stock, $2,500 investment. Guess what? You just paid for literally months and months and months of the Research Center in that one little trade. I mean, it's amazing. Blows my mind. But I just want to give you guys a little example of that. All right, you sell for 20 cents. That's $200. That's 4 months right there of the Research Center. No-brainer just in that one thing. And these are posted literally every day, every other day, every third day type things. But that's just on the hot charts and alerts, let alone the Research Center nightly videos that I do, 45 minutes in length on all time frames, on the dollar, on oil, on gold, you name it. Even touch on stocks, Pro Trader watch list, daily market report. All that is included under that. Really a no-brainer, folks. In any case, join the club. It's growing and growing. Don't let your peers surpass you in their knowledge. I mean, that's really the bottom line, folks. I'll tell you one thing. The bottom of the rung always will lose money. If you're on that lower rung of investors or beginning traders, you will always lose money. It's just the nature of the beast. Over time, you will be the loser. Just like you go to a casino, the odds are against you. As you grow and learn, you become in the upper echelon like the institutions. Do you ever think the institutions lose over the long term? No, they do not. All right, experienced traders, do they lose over the long term? No, they do not. It's up to you to get to that point. And again, joining the Research Center is the #1 step to doing so, and the chat room and the webinar. We'll see you this weekend, folks. Take care.